John, I want to talk about Sepio. You manage roughly $6 billion. Tell me a little bit about Sepio's management philosophy and how do you use ETFs in your business?
Sure. So Sepio is a multi-family advisory firm. We also have an investment management side of the house that includes our ETF that you mentioned earlier, SMRI. But generally speaking, with ETFs, we're going to have very strong opinions about specific asset classes and markets around the world where we want exposure. And ETFs are a very tax efficient, a very liquid, and a very transparent way to express a specific investment view.
Yeah, so I noticed you converted, I think this was a separately managed account, right, into an ETF, what we're calling here the Sepio Capital U.S. Equity ETF here. Is that right? You converted this into an ETF.
That's exactly right. Yeah, starting in 2020, we had a separately managed account strategy for our advisory client base. And we were fortunate that that strategy had done quite well. We wanted to broaden out the investor base as well as use the tax efficiency and the transparency and the liquidity associated with an ETF for both our clients and for a broader investor base.
Yeah, so we're putting up a full screen here, John. I'm sorry to interrupt here, but this is actively managed by you. It's 30 to 50 stocks. There's what we're calling a fundamental value approach. Tell us about what's in this, how you choose the stocks that's in it, what's going on with this one.
Yeah, so we would say that there's been quite a bit of storytelling that has crept into the U.S. equity market over the last decade, really post the GFC. And a lot of narratives around why a business or a company should do well, and very little attention to the boring process of actually doing valuation work and a lot of fundamental analysis. So there's a lot of attention today around valuations in AI names and related names being possibly elevated. But we would argue that we've seen some expensive valuations creep up in several segments of the market. You know, you've got Costco trading at 52 times forward earnings. JP Morgan, highest price to book valuation in 20 plus years. So we really wanted, in a systematic, repeatable way, to get exposure to quality companies, and we deem quality to be a prodigious amount of free cash flow generated relative to the capital employed by the business. And we wanted to align ourselves with senior management teams that were very shareholder friendly. So instead of diluting equity holders to grow the overall business, we wanted to be focused on management teams that were buying back stock when valuations looked attractive and or were also paying out dividends.